The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician Hour. There's a ton of things to go through, so let me just start right at the top. The Dow right now is up 313 at 25,209. What I show my subscribers every morning is I show these two charts as the daily without the MACD, the stochastic. That's on the right, same chart, just a different look at it. And in this particular instance, what I had said is that a pop to the upside above the red line, that's the 20 period exponential moving average, 20-day exponential moving average, would be very positive, and that would say that within the larger arc or lowercase h formation, we could get another arch. So that's the lowercase h that goes to lowercase m, particular technique that we follow closely in the Chapman wave methodology. And you can see that within the right side, the stochastic is turning up. It's not looking great. It's at 42%. It is turning up. On balance volume is up. That's the blue line. And the MACD has just finally crossed positive. It struggled and struggled, but it has crossed positive. So the technicals are now actually confirming the rally. It's also confirming that this isn't a magnificent rally because it's not above the major high of 25,800 that was made right there in late February, early March. February. Yeah, 27th high of 25,800. And that's really the key. Is this next week, is the market going to push right above this downtrend line, the Dow? What are we looking at? And within the 120-minute chart, you've got the same sort of thing, almost got like a one-to-one to the upside. So far, this is good action. Now, what I've been looking at, so for subscribers, because of this choppy sideways move that we've been looking at, what I'd said is we're going to grab, let me go to this here. We're going to grab a broker, because if the market's moving higher, the broker should move higher, and the brokers have been looking very good, even though in the daily charts they're all in C's and D's, the ones that I'm following. Fortunately, we've got a broker that's just had a fabulous 3 days move to the upside, and I think that's really important. And what it's saying is that it gives us a little breathing room, because within the context of looking at the different sectors, there are some sectors that are still very weak, but there are some sectors that are doing very nicely. So here we go. We're looking at, right here. We're looking at the Dow, and it has 24,960. This is the 9-period moving average support for early next week. Upside, I'd say, is 25,000 to maybe 50s, and then the 90s. Those are the levels that we're looking at to see if there's an overbought situation. This is still underneath the previous high, so we've got to look at it as if it's in a retracement towards the upside once again. S&P, of course, the Dow is up 1.28. The S&P is up 1.22, so the Dow in percentage terms is looking better. But in chart formation, look at the daily. It's getting close to the 2789.15 high of the 27th of February, pulls back to 2647. That is a 40-point decline. And now it's coming back as a 2772, very close. So I'm going to be watching this because this is still an arch formation. But in fact, it looks a little bit like two arches, like a lowercase h that goes to a lowercase m. However, look at the weekly chart. And I'm going to say that if the S&P doesn't have to close, first it has to go over the high of 2789.15 next week. If it does that, then I have to say, okay, have we already done the consolidation? We've had an internal low. Was last week's low like the residual low, and now we're just moving higher? I'm going to get into all of the earthquake and aftershock, or internal low and residual low, in a moment. Let's just finish this up. What I wanted to show you is that within the context of the monthly charts, in all time frames, the monthly charts are still looking very good. So talking about monthly charts, we just snuck by a tiny little bit above the 170.95 all-time high on the 26th, plunges 18% down to 150.13, the QQQ Power Shares Trust Series is the NDX 100 trading vehicle. And now we're at a new all-time high. This V-shaped pattern is really important in my work. Why? Because if there is a push above, sharply above the 170.95, and what I've been saying is a close on a weekly basis in the 172s suggests to me that you've raised the base in the weekly chart of the QQQs, and that makes the 170.95 breakout area very important, because if this coming week, as soon as this coming week, a week from today, if there is a close below 170.95, we could still maybe consider that that's a V-shaped failure pattern. But if there's a close above 170.95 this coming week, I have to say that this leg D in the monthly chart, now it's very clear. Remember, there was a question: was they going to use that phantom peak right there around about the the July August period of last year as a phantom peak? No, you don't have to. This is an actual leg D, and that's what we look for in the Chapman wave methodology. So those are the parameters. 168.67 is the 9-period moving average support in the daily chart of the Qs. Now the IWM, you remember the IWM was doing fantastically? Going into the January 24th top of 170.63. Then it plunges down to 144. Was that the exact low? 144? I think it was lower. 142.50. So that's almost a 40-point decline. That is a huge decline, bigger than the percentage-wise in the Qs. And now it's in a leg E to the upside. So yes, once again, we're looking at a potential V-shaped formation, but the technicals are improving, but they're still very weak. The monthly is the one that I've been looking at, holding the 9-period moving average. So far, not a bad-looking monthly chart. Wow, this is going to be such a fascinating week coming up. Now let's get to the nitty-gritties here. We've got the gold, which was down quite sharply. In fact, gold this morning, earlier, was down at the 1313 level. It's trading at 1324 right now. Nice comeback, but it keeps doing that, and it keeps having a failure. So will this be a turnaround with the MACD finally turning up and stochastic saying, hey, I'm up at 8% already, and the weekly chart says, within the context of these cup formations, I just had another cup formation. I can try to go higher. I can try to go to the 1335 level by Monday or Tuesday. That's what I'll be looking at. Why? Because silver has had a nice candle turnaround. It had a little bit better chart formation, but once again, it isn't leading. It's up 17 cents. I've been watching closely, because if next week silver goes into the 16.95 area, 17 area, that's going to be very important for a turnaround. And this dollar, poor old dollar, just cannot get out of its own way. It's okay. It's down 6 cents at 90.07. But it's really stuck in this range on the weekly chart. So I'll be right back. Basil Chapman. I get this Dow. Dow's up 324. This is up. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone, we're back. Yeah, so it was mentioned in the den that the IWM is very close to making another leg up in the monthly chart. Yeah, you know, 160.63 was on the 24th. It's trading at 158. 2 points doesn't sound like much, but we need to see follow through on Monday. That's going to be really important. Now, let's just go to, we're looking at the dollar, and basically the dollar's in this trading range. It's trying its very best to get off the bottom, and it keeps looking like it wants to succeed, but I've drawn in the lowercase h that goes to lowercase m. That's exactly what's happening here. The weekly chart in a gray leg A, it's off the bottom, but until I'll just keep repeating it, until the dollar's trading in the 91s, these are just bounces and important kind of impressive, very quick bounces, but nothing impressive yet in the weekly charts. Not until it starts trading in the 90s. So that's the dollar, EUR/USD. Wow, I've got a lot of questions flying in here. In a trading band, that peak D at 1.2555, still there, a peak C in the weekly chart. I'm just watching it. I think at some point, euro will spiral above 1.2555. Just in the meantime, it's kind of sideways. And if you're looking at the USD JPY, which is the yen, dollar-yen currency pair, really nice up spike today. And that makes me a little bit suspicious of the dollar not breaking down, but holding okay, yet the yen is rallying quite sharply, and I've been watching this relationship kind of falter. It was a good relationship when the yen was rallying. It wouldn't give the percentage gain on the dollar, but they kind of went in tandem, and when it failed, that's the same sort of thing. So I'm looking at this and saying, okay, what's in store next week for the currencies? What's in store for gold? And I suspect what we're looking at is that the majority of people are looking, the majority of buying is going into the equity side. Look, if you go to the, I haven't finished yet, so let me just do the TLT. TLT is down 58 cents. If I go to my long-term chart, this is a chart that shows the triple yield chart. I show on Saturday, I give an explanation of everything to my subscribers every Saturday. When I start my calls for Monday, I start the charts going out 8, 9, 10, 12, 14, whatever number of charts we need. So the yield is up 20 cents, 20 ticks at 31.53 on the 30-year T-bond yield, the TYX. Hasn't really gone above last week's high, and certainly hasn't gone above the 32.21 peak C. I suspect we will make a D. I suspect that this is a very good holding pattern here for the TNX, the 10-year, the brown. And it's still a peak D, but look how it's holding near the highs. And we've got a brand new, it just missed it. Look, you've got a high of 26.82 last week in the 5-year T-note yield, the FVX, the cyan-colored one. And so we got 26.82, 26.77. Just missed. Important call coming in. Repair work for the damage from the storm. So that is very close. And I suspect that we are going to see some higher yields. And I think that's what's keeping most of these home builders down. So this is very interesting. Look, wood, the iShares Global Timber and Forestry ETF, almost at an all-time, wait a minute, 77.99, 78 by 1 penny. It just made a brand new. This is now G/C goes to a G. Oops, G/C now goes to a D, a brand new D. Very important. Okay, so now what we're looking at is they are. So the home builders at this particular point coming off the 311 low, it's okay. It's not looking great. What I wanted to go through right now is to show you that there are certain aspects of this market that are very important. So the SMHs, right now, this is the semiconductor ETF, market vector semiconductor, trading at 111.53, up $1.72. He's in a very strong leg D. We don't have any position in this particular thing, but I'm watching it very closely because the MACD is very strong and the stochastics at 94%. That is really, it's going to have to be really bad news for it to tank and go under the 108.46 9-period moving average support, 107.33. That area is going to be key support next week. I don't know what it's going to take, but it broke out of this trend line resistance in the weekly. I'm calling it a leg F. I don't know how I can call it a leg A. I might have to. I'll explain why in a moment. But the market vectors semiconductor ETF, which has Intel, Taiwan Semiconductor, it has Lam Research, Applied Materials, they all in leg D's and E's. So I'm watching this very closely. And the monthly chart is in leg E. Very strong monthly chart. The weekly chart has just crossed positive after really over the past, I would say the past many months. The technicals have been deteriorating even though the price has gone higher. So this is kind of the clue for me. The XLK as well, XLK, which is the tech sector. Very strong today, brand new leg. I'm calling it an E right now in the daily, and a leg D in the weekly, and a leg C only in the monthly. Very strong. So until these sectors really tank, I'm not prepared to take a chance of shorting the indices, not at this particular moment until I see clues, because in the rotational aspect, as long as you've got new highs being made in key, really important sectors, it's just saying, look, be careful, you're going to be going high. In fact, I was talking about Boeing yesterday. We were short. There was a really strong move to the downside. We've been short in 353.01. It went to 335 on the 2nd. Overnight, the other night, it actually went down to the 337s. Opens quite nicely. And today it's having a 5.5-point gain. So we're out at break even. I wanted it more as an experiment than anything else. Yes, there was a nice percentage gain. I wanted to see, is this the moment where peace breaks out and the defense area, where Boeing's part of the defense, even though it's part of aerospace, but the Raytheons, etc., kind of fail. Raytheon's still under its high of 222.27 on the 27th. But General Dynamics, new leg D. New leg D in the daily, it's still under the peak D in the weekly. and leg E in the monthly, but getting kind of toppy. So we'll see what happens with the peace talks and all that sort of thing. And I'm watching the defense area. So a break-even trade. So one of our short positions is still way under where we shorted it. It's in the home builders and our bank stock, Bank of America. Someone asked me, could you just go through your, I don't usually like to do this, but I did get asked. So Bank of America should make a leg D above the peak C that was made on the 27th at 32.85. It's at 32.62. It's looking very good. The long that we just implemented a couple of days ago is Schwab. It's at 57.22, up $1.31. Huge breakout in leg D in the daily, breakout in the weekly chart, monthly chart looks very good. We'll see what happens, how the turn comes about next week, if it's going to be there.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I remember back, Dow's up 324, S&P's up 33. You mentioned the Den was the Chapman Wave song. I almost forgot about the song because the sheet that I had with my song was it kind of flew off the shelf, so I didn't quite see it. Now I'm seeing it. So the song is called Buy at the Low and Sell at the High. This is, of course, what we tried to do by Basil Chapman. The market goes up, the market goes down. Supposed to buy at the low and sell at the high. But you know what we tend to do. We buy at the high and we sell at the low. Chapman Wave is what you need. Buy with the Stoke and the old MACD. That's the MACD, right there, the MACD. Follow the price and wait for a peak. Higher highs is what you seek. The wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. So what you going to do, which way to go? You sell at the high and you buy at the low. Much easier to sing, even if out of tune, than to actually implement. So SQ is Square Inc., point of sale software. Making a doji candle leg E. MACD is good. Stochastics at 91%, very good in the daily. Weekly, I'm calling this a leg C because it's just so strong, and maybe it's an alternative F/C. It looks very good, and it's a leg E in the monthly. A lot of people keep asking me about this. This is very good action and has a lot of support between 49 and 48. I'd like to see a dip down there, and then we might consider going long. It's one of those that's been on my list. Missed getting in. Okay. SQ question is, what would you buy? USB. USB is US Bancorp. It's acting well. I think there are some other stocks in the area in the same group that have slightly better weekly charts. I like the monthly chart on this. I'm going to say at 54.98. I would just have a starter position in this because it really needs to break into the 56.80s to tell me that it's on its way much higher. And it's at 54.97, so it's a little bit of a way to go. It could even fail here and go sideways. I'd say, in your case, the person who asked who likes to get the longer term, this is one of the longer term ones. It should participate. I'm just not 100% sure. Let me just have a look at Goldman Sachs here. Goldman Sachs, of course, a different price. The one is in the 50s, the other's in 270s. I think Goldman by next week should try for a leg D above 273.12. So that's a better weekly chart and a much better monthly chart. Maybe Goldman's going to be the thing that says, you know what? Follow me. Okay, next question. Oh, so that was also Bob's question over there. So there's Goldman looking very good. IBM was another question. Yeah, IBM has been a laggard, but it's in an area, I think it needs more time. It needs another stroke of genius to really get going to the upside. In the meantime, it's in a kind of an arch formation. I put it at 155 to 153 is good support, trading the 158s. If it breaks into the 160, 150s anytime in the next week and a half, that'll be the best action that it can do. It mustn't break the 154 support. Otherwise, it's going to make an arch formation. So one of my favorites. Next thing is Exxon. People are wanting for dividends. I don't see anything in Exxon right now. I think it's under tremendous pressure at 74s. I think it has a lot of resistance in the 77s, and it better hold 72 over the coming week or so, because that 71.12 200-period moving average in the monthly is lurking and waiting, almost like a magnet. I'm kind of nervous about these multinational oils. Next question, KRE. Yeah, KRE out of the XLF and the KRE I mentioned the other day. I think KRE is getting more business under this whole economic infrastructure that we, taxes, etc., plus jobs. The locals I think are doing better right now. Look, the XLF is still way under. The KRE is within pennies of its most recent I don't know if it's an all-time high, but of multi-year highs. And the XLF is acting very nicely today. It's up 50 cents at 29.57, trying to break this resistance level. It's lagging. The other one is a stronger chart formation, KRE, rather than XLF. So I just wanted to mention that. Yeah, that's the regional. I meant to say KRE. I've just mentioned the symbol. But the KRE is, in fact, the S&P SPDR Regional Bank ETF. The XLF is the S&P Multinationals. This is Select Financial SPDR Fund. And it has Visa, MasterCard, American Express. It has the card companies as well. So, okay, got those. Now, a couple of things. I mentioned yesterday when George had called that I'd look at ODP. I looked at this last night, and it's trading at 244. This is Office Depot, and, of course, Staples wanted to take it over at one point, didn't, then Staples itself became privatized. And the question here is, under the privatized area, the group that took over Staples, are they really looking at Office Depot. Well, I look at Office Depot, and I must say, on a price, just on a chart formation, the weekly and the monthly charts are saying to me, whoa, this is so close to going broke on the chart. And no, I shouldn't say go broke, going down to the single digits, which is virtually the same as being broke, but not quite. So I don't like it in that regard. But if you want to treat it as something that's out there as a potential, like I had years ago, a couple of years ago, I had Rite Aid, RAD, as a turnaround situation. I don't know if this, it's just there's too much competition in this field. I mean, even CVS has a chunk of stuff you don't have to go to Staples or Office Depot for, or Walgreens. I just think the competition is really tough. If you want to treat it as a really an out-of-the-money a call, and you're just buying it at 244, saying, you know what, it could bounce to the 4s and 5s if there's ever talk of a takeover. People start looking at it as if it's another Staples, maybe. But I'm just going to say right now at 244, I'm going to give it another 3-4 days. I don't mind missing 20 cents on this either way to make a correct decision. And I can't make a correct decision right now because the technicals are still very weak. Looking out, I can see that at some point, if it holds above 2.30 over the next 2.20, 2.30, can hold that support over the next 2-3 weeks, then I think maybe there's a trade. But I'm just going to say I'm holding off right now. So I said I'd look at that. Now, I wanted to talk about the URI, which is, what is it, United Rentals, making a leg D under the 106 open and 189 round number high on the 25th of January. But the high today is at 188.25. So I'm watching this really closely because there's the V-shaped pattern in the daily. I suspect it is going to make a leg D to the upside at 189 round number high. What a pullback from 189 to 156, almost 40 points, 36 points, 34 points. That's a big pullback. And now it's coming back in with speed and momentum. And the MACD and stochastic are improving. They could even cross positive. So this is something to keep your eye on. I'm mentioning this for 3 reasons. One is in the rental business, I want to see what's going on. I'm putting it together with clues in the economy with a Cintas, which is in leg C in the daily, overalls, uniforms, rentals, all-time high as we speak. And the other aspect, the third aspect, is within the context of the market. These are kind of the areas that don't get spoken about very much at all when people talk about wages and all that sort of thing. So these are good signs. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So if you're looking at the iShares US Broker Dealer and Securities ETF, look at this huge leg E in the monthly chart, a new leg D in the weekly, a leg E breaking out sharply in the this is in the daily chart. This is very important to me. This is saying that the public is in, and there's a different dynamic that's going on, and that says that strong people are becoming used to the fact that every single decline has been met with buying. Every single overnight horrible story for the market with all the media just talking about whatever it is, the very next day, the low is made almost immediately. And then the market closes towards the highs. So let's go to Jerry in the back bay right now. Jerry, how are you? Jerry's got a little delay listening to... Hi, Jerry.
Hi. Google.
Yes. Google. I'm looking at the Goog. I'm not looking at the GOOGL.
Whichever one, yeah.
GOGL. Let me just see. One's at 1148 and the other is at 1149. Doesn't matter. So I'm looking at Google because that's the one that I always use. And that says in leg B and leg C. So, oh no, it's in leg D right now under the previous peak F of 1186.89 on the 29th of January. The huge move down. So this from 1186 down to the 200-period moving average exactly at 992. So that's 300. Oh, that was a really one of the sharpest declines on a percentage basis it's had in its most recent few years of history. So, am I wrong? Am I recalling that you had it and we were looking to see where, if it pulled back, where there would be support, and that, if I remember correctly, I'd said this is something that you want to keep. Am I wrong?
Right. Yeah.
Okay.
Now I'm thinking of adding to it. I got a gut feeling that that this group is like the triple Qs is having one more run. I don't know how much it's going to go, but Google is lagging, but it's the cheapest stock, and I think it's going to make a new high.
So, Jerry, this is what I'm going to recommend to you, even though it's what I call a gray leg D because it's under the previous peak F high of the 29th. That was the all-time high. I'm agreeing with you. The technicals are starting to improve. There's a way to do this, and because this is really a breakout session in some key indices, at the same time, it's a very It's a very powerful move that keeps getting added to throughout the day, and sectors that I think are really important as a tell on the market so far are doing very well, like the semiconductors, like the brokers. I'm going to say to you that at 11.49 right now, to add to a position, I think it's not a bad idea. You've got 40 points to the upside before it retests the high. These could be very difficult, 40 points if, in fact, all of a sudden come over the weekend, whatever news it is, and then we start this every week within the week, we've had big moves up and down. Looking at it historically, as I said earlier, the move in the Dow, when you're looking at the Dow, this is chopping. This is one of the smallest moves it's had in a week, considering what it had done when it made the high of the 26 at 26,600 and plummets 12% to 23,360, or the 18% decline in the NASDAQ. My thinking here is that we are starting to build some support, and that I don't know if I'll have time to talk about it, I hope today, talk about the internal low and the residual low. So let me just say that as far as Google is concerned, this is still a stock that is in the most attractive group. It's, you know, the FANG type stocks.
Right.
So I think you're right. And I would just say to you, you know what, if you bought it now as an add-on, in other words, it's part of your portfolio, let's call it a shorter term trade rather than a position play. It could
definitely a shorter term trade, right?
So if it's a shorter
I find stocks tend to fill gaps.
Yep.
And it had that gap down, and I'm pretty sure it's going to go back up to that at least.
You see, what I would say to you is that when stocks or indexes fill gaps to the upside after a gap to the downside close to the lows, I find that's really bullish. Doing it when it's closer to the highs, I don't have the same kind of evidence. In other words, the material that I'd look at, there are not that many times that stocks gap down huge and then continue down lower and then fill it and then just start a brand new move. More often than not, I like to look at it as a longer term. So I'm just going to say to you, buying it at 11.49, I would have some kind of a stop, maybe even a 30 to 35 point stop, because this is a trading position with a large price stock. I'm going to say to you, that's the way I would look at it right now. But what I really would say to you is by Wednesday of next week, I want the gap low is 11.57. And you're only 8 points away from that. If by Tuesday or Wednesday of next week we haven't filled the gap, then I'm going to say to you, keep an eye on this. You don't want it to get away to the downside. But I would say to you right now at 11.49, I'm with you. I'd have it as an add-on position and let it tell you what's going to happen. Expect to have a lot of resistance come up when it gets to the 11.57 to the 11.87 area, because that traditionally that V-shaped pattern, that's where you'd expect resistance. Hey, I'm with you. I'm saying to you, as a trading position, even though it's in leg D and we've missed the low under 1,000, this is still in the ballpark, and the weekly chart is really improving nicely, and the monthly still looks very good.
Yeah, I'm thinking on the market that we've diffused the tariff thing for a while, so that's not like a big fear, and that this employment report was almost perfect. Like
Yes.
You got low wage gains and high employment, and it was like the best of both worlds. So
Correct.
the rates won't go up too much, and that you now, going into the end of the quarter, are going to get guys reinvesting some money.
And it gives you room, Jerry, you want the wage inflation at some point. You want people to be making more money. So I'm kind of with you. And not only that, we've had so much in the way of potential terrible news. Even with Cohn leaving, it was perceived as a bad thing. I don't know. The market just seems to say, hey, look at the big picture. I'm trying to find my Boston Globe front page. They made this thing, this 2-page front page back before Trump was elected. You remember the Boston Globe had this the Dow is going to plunge back to the 6,000s. It was just the most depressing. And I said, I've got to keep this, and we'll see how wrong the globe is going to be. And look how wrong. And they never talk about it ever. I want to find that paper, because we are seeing the disbelievers become believers now. And I don't care what you think politically, the market likes what's going on. Google likes what's going on at this particular point.
Thank you very much.
Thank you for calling, Jerry. Have a great weekend. We'll be back, folks. Dow's up 339. S&P's up 35. We'll be back for the last segment, and we'll talk about some nitty-gritties.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, folks, you got Steve coming up. Great show, I'm sure. Dave White, another great show. Tom O'Brien wraps it up with these look at the markets, what happened this week and what he's expecting next week. Fabulous show, I'm sure. And, of course, have a great weekend. So we've got this final segment, and I want you to just quickly go through sell the news. So it's buy the rumor, sell the news. That's the steals. Look, the SLX pulling back from the 9-period moving average. It had done fantastic. It went from the 44s all the way to the 51s, and now it's trading at 48. I think this is a digestive phase, and it's almost like a show me phase, so that the steals, we haven't seen anything yet in the steals. So are they going to get more business? Are they going to make more money? And so the question I got is, so Hector wants to know about, hi Basil, if you've got a chance, can you look at AKS on this pullback? That's AK Steel. I got in this morning at 5:30. Seems like light volume on the pullback. You know, I'm looking more at the pattern of the lowercase h. I'm looking at the high that AK Steel had back at 680 on the 17th of January, and then it pulls back very sharply to the 436. I mean, that is a huge move down. Then it has a wonderful move to the upside, single leg A to 640. Now it's pulling back. I'm going to just say to you, I'd be really careful at 521 right now. I think it's going to test the low that was made on the 28th of 515. I'm a little nervous about the steals, and that's why I did not want to get back for my subscribers back into the steals. Had fabulous gains in the RS, the Reliance steel. Just didn't. I'm waiting. So I'm just going to say to you, if it's me, I would at 522. I wouldn't, and 530. It's not a big deal, but it's a big percentage pullback. So I'm going to say to you, I would lighten up on the position. And maybe just have a little tiny bit, and let that tiny bit be your clue as to what's happening. Because next week, if you can see a nice bounce to the 548 level, that's really good. But believe me, if it closes underneath 515, I don't think there's room for support until it tests 5 again, or maybe even 490s. So I just be real careful, Hector. In fact, to tell you the truth, if it's a trade, I'd be out of it right now. I'd say, whoops, going the wrong way. And even if it bounces, you can get back in. I don't want to have the risk of, even another 50 or 10 cents on the $5 stock. So have a wonderful week. Check out my opening call. That's my daily newsletter at TFNN. And just
no matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.